On the Tape is presented by CME Group, where risk meets opportunity, and iConnections, reimagining how the investment industry connects. Well, it's an honor to be with Michael Saylor, the executive chairman of MicroStrategy. He does not need an introduction, I think, unless you've been living in a cave for the last 5 or 6 years. People pretty much know exactly who you are. Thanks for joining us, Michael.
Yeah, thanks for having me.
You know, it's interesting, and we've talked a number of times, and, I'm not going to play the Bitcoin where's the price going game because I don't think it's all that interesting because I know your thoughts on that. But what I find fascinating about you, you're somebody that, well, I don't want to say you were a non-believer, but you're naturally curious. And that curiosity probably took over sometimes in 2019, 2020 or so, when you sort of immersed yourself in Bitcoin and probably the white paper and some of the information that was out there. And, you say all the time, if you spend 10 hours, you could say, I understand why this is probably not going to work. It's gambling, it's casino. You spend 100 hours, it starts to make sense, 100 hours studying it. And then when you get to 1,000, it starts to become exponential in terms of your learning. And you recently said that you've never met or heard of anybody that has not spent 100 hours that can have an intelligent conversation with you about them taking the con side and you taking the pro side. So speak to the rigor that's required to understand what you obviously understand better than almost anybody on the planet.
Well, first of all, you can characterize Bitcoin as a digital currency. You can call it digital gold. You can call it digital cash. You can think of it as digital money. You can think of it as digital property. You can think of it as digital capital. You can think of it as digital energy. You can think of it as a digital asset. And it spawned out of the quote unquote cryptocurrency industry. So a person on inspection, if you've heard about it for a few minutes or an hour, your immediate reaction is cryptocurrency. Crypto is some kind of digital something, and currency, it must be a currency. And people go back and they say, well, it must be a currency because the front page of the white paper said a peer-to-peer, electronic cash system. And so most of all the debates and the criticism in this entire industry are just about semantics and words and interpretation of words. And oftentimes people will just hear one of those words, and based upon their life experience and what they learned in school or what they've learned in business, they will immediately come to a conclusion, which is either an economic opinion or a political opinion or an academic opinion, without first stopping to discuss what the words mean, and even if the words are relevant. For example, peer to peer. Well, what's a peer? Well, a Bank of Japan is a peer of Bank of England, right? So maybe Satoshi meant it was a peer to peer system to move a monetary asset between the central banks or between commercial banks or between Apple and Google and corporations. And if you interpreted the peers as megacorps, or mega commercial banks, or countries, you would have a different view than, oh, peer, that just means a consumer like me, and I want to send $5 to my friend. And that means Satoshi meant Bitcoin was to send $5 between 8 billion people peer to peer, right? And of course, if you think the latter, you have a totally different opinion of whether it works or doesn't work, versus if you think the former. So what's the definition of peer? Now, what's the definition of cash? Well, a lot of people think cash is the dollars in their pocket, or the fiat currency, $5 bills or $20 bills. And so they think peer to peer digital cash. Okay, well, I want to send $20 bills from person to person to buy coffee, because that's what I do with $20 bills. And so then it becomes a big debate. Well, obviously, it's not very good for buying coffee. A billion people can't buy coffee with it. It keeps changing in price. So it must not be a success. But of course, that hinges upon you redefining cash, or defining cash as fiat currency in small denominations. But of course, when the King of Spain wanted to finance the war in the Netherlands, he sent a fleet of ships with a bunch of gold in their holds to pay for the entire war effort. That was cash. That fleet washed up on the shores of Queen Elizabeth. She stole the gold. It bankrupted the Spanish Netherlands war effort, and the result is a Protestant Netherlands. But, is $1 billion of gold cash? And so when Satoshi said, well, peer to peer electronic cash, maybe what Satoshi meant was sending $1 billion of gold between the Bank of England and the Bank of Japan, or the Swiss bank, or Citigroup, or JP Morgan. Okay, well, if you interpreted the words that way, right? Cash is money, money cash. JP Morgan says gold is money, everything else is credit, right? If you interpreted cash as money and not credit, and peer to peer as any two counterparties, okay, well, then maybe Bitcoin isn't digital currency at all, right? Digital currency, probably the best example of a true digital currency, or close to it right now, would be a tether, a stable coin. And if I could move a stable coin, $87 worth of it at the speed of light on a crypto rail, no KYC, no regulatory controls, with complete privacy, that feels like digital currency, completely private digital currency. Okay, so now if I say to you, well, do you like Bitcoin? And you think, oh, Bitcoin, the digital currency? Well, then you might very well answer like, say, a certain politician answered a few years ago, like, no, I like the dollar better. Okay, because you thought the Bitcoin was competing with the dollar, and you thought someone was asking you whether we're going to replace the dollar with Bitcoin. So if you think it's digital currency, and you think the euro, the yen, the dollar are currency, then the implication is, well, we're just going to replace the currency of your nation, whether it's the dollar, the euro, or the yen, or the CNY. We're going to replace it with Bitcoin. Now you end up with the entire establishment, every establishment politician, most bankers, most traditional economists pushing back and resisting it. And the politicians will resist it because nobody wants to collapse the dollar. It's a source of American strength that's probably worth trillions of dollars a year to the US. So obviously, we know why we like that if you're an American politician. On the other hand, if you're a classically trained economist, you say, oh, well, the dollar, it needs to be stable, and we need to be able to inflate the currency supply, and everything's priced in dollars. And so that's a reason for classical economists to dislike it and criticize it. And if you're an accountant, you would say, well, it turns out that every major corporation in the world has accounting systems, SAP, Oracle. They've spent more money in those accounting systems than almost anything else. I mean, a lot of big companies have spent billions and billions of dollars on accounting systems. They're all wired in euros and dollars and yen and CNY. And if you, as CEO, came along and said, hey, we're just going to replace our US dollar-based accounting systems with another system, the board of directors would fire you. The entire finance department would quit. All your shareholders would walk away from the stock. Probably your accountants would withdraw noisily, and your company would collapse. So that doesn't work. So you can see how simply by choosing the word digital currency, I will get a negative pushback reaction. Now, if I roll the word to digital gold, well, a lot of times you go to 1,000 rich families and you say, hey, do you like Bitcoin? It's digital gold. And they say, oh, well, that's interesting. I don't own any gold. Okay, name me one billionaire that ever made $1 billion investing in gold. There isn't any. I can't name a single billionaire that will attest to actually owning $1 billion of gold. I can't name a single family out of 10,000 wealthy families that would ever say, well, we made billions of dollars and we bought $1 billion of gold. Okay, so well, gold's defective. I could tell you why in 2 hours, but what does it matter? The point is we fixed it with Bitcoin. Everybody can say, okay, well, so I suppose you fixed something I didn't like. It's a crappy commodity. And so good for you, but I don't own any. Okay. So that takes you a different path. Now let's say we change it to digital property. Okay, well, you want to buy $1 billion of Bitcoin. Oh, it's digital gold. No, I'm not going to. They're going to 6102 me. I heard the government seizes gold when it gets to be too much. You think it's gold, and you're afraid that the government will seize it because it backs the currency, because that's your historic mindset. If I say to a wealthy person, you want to buy $1 billion of property? Where? Miami Beach? Yeah, sure. How about New York? Yeah, sure. How about London? I guess so. How about $1 billion of digital property in the greatest city in cyberspace? Seems okay. If you went to Donald Trump and you said, hey, I'm going to invest $1 billion in digital property instead of physical property in LA, he'd probably say, yeah, that's fine. So if you actually call it, and how many people say, oh, I'm a rich person, I bought $1 billion building in Miami Beach, but I'm worried the government's going to 6102 it. No, nobody ever said the government is going to 6102 my $1 billion building, right? I mean, so you have the skeptic saying, oh, it's too good to be true, the government will ban it, but no one ever said the government will ban a building. And so if you think it's property, it just becomes a very straightforward proposition. If you think it's gold, I call it the good, the bad, and the ugly narrative, Guy. The good narrative or model is Bitcoin is digital property. The bad model is Bitcoin is digital gold. The ugly model is Bitcoin is digital currency. And it all comes down to the word, and you won't get past the word before someone comes right back over the top and tells you what they think. And let me, one last point, and you go to the next question. My last point is I can sit in a room of billionaires and I can say, if I said Bitcoin's digital currency, every one of them flinches and says, I know that's not going to fly here. And I can't come out against the real, the peso, the dollar, the euro, the CNY, the whatever. Okay. So all you got to do is say that and you get immediate no. Or I can say, yeah, they go, well, what's Bitcoin? Why should I buy it? I said, I bought it because it's digital property. It's the greatest city in cyberspace, and it's limited to 21 million blocks. And I think one day every rich person will want to live there, and every other person, everybody with money. And you know what they say? They go, oh, no one ever explained it that way. That makes total sense. Yeah, I get it. Yeah, I'll buy some.
With paying homage to Clint Eastwood, Eli Wallach, and Lee Van Cleef, I will ask the next question, and indulge me for a second. And believe me, I'm not suggesting any of what I'm about to say is correct, but it is my belief that Bitcoin was created out of a fear of global central banks run amok. And the timeline sort of suggests that. If you go back to sort of 08, 09. When you see, you were just talking about physical gold, in 2022, global central banks purchased approximately $71 billion worth of gold, which was a record at the time. I think it was 1,131 tons or thereabouts. They did effectively the same thing in 2023 and are on course to do similar this year. When you hear that and or have read about that, you must be saying to yourself, they're just not getting it. They're missing. Maybe there's a place for that in a very infinitesimal way, but my sense is if you had the opportunity to speak to any and all of these central bankers, as you had a number of times, you're going to Prague in a couple of weeks, I think, there'd be a much different conversation. Speak to that.
Yeah, I think gold's a waste of time. It's dead money. Maybe it's virtue signaling if you're buying it. Gold broke down, as a reserve asset before World War One. And on the eve of World War One, when all these nations declared war, every single one of them went off the gold standard. And so the myth, there's a myth of a gold standard that people like to cling to, but I've read like 3,000 years of economic history.
Mm-hmm.
And as far as I can see, it was never as good as anybody ever thought it was. It's always been defective. The real elephant in the room here is two things. Gold doesn't work in time, and gold doesn't work in space. Um, if you look at using gold as a property asset, a reserve asset, a treasury asset in space, there's no way for 1,000 different organizations to custody their gold and swap it every week and settle it. You can't settle every day. You can't settle every week. You can't even custody it, right? So gold centralizes. I mean, how is it possible that the United States could seize the Russians' gold,
Mm-hmm.
right? Because the gold standard collapse, or the faux gold standard after Bretton Woods collapsed, I guess, when the French wanted their gold back. But if you wanted it to be an effective treasury asset in space, you would need to allow peer-to-peer settlement. And that means how do you have, and when I talk about peers, I'm just going to talk about Apple, Google, JP Morgan, Citigroup, Bank of Japan, Bank of Switzerland. How about the 10,000 biggest economic entities in the world? They all need to be able to custody and swap it every month for it to be stable as a settlement network. And Of course, gold isn't that. You can't sell it every day. It doesn't move fast enough. And so that's why it fails versus Bitcoin. With Bitcoin, you could have 10,000 different custodians, and they could be settling $100 million between each one, or $1 billion between each one every day, and the network will hold that kind of load. So gold doesn't work in space, but it also doesn't work in time. Gold has under best of circumstances, a 2% inflation rate. That's steady state. And a 2% inflation rate of gold means a half life of 30 years, which means that 87 or 88% of your economic wealth is dissipated over 100 years. Right. And if you look at Spain in the 16th century, and the 100 years after they discovered America, and they looted the Aztecs and the Incas and everybody else of their gold, they also created 500% inflation. Right. And so they actually hyperinflated their currency in gold coin, collapsed their own empire. And so, and the stories are the same about Julius Caesar. When he went off into Gaul and he conquered Gaul, he brought back so much gold, he created hyperinflation in Rome, and that was part of the reason for the civil wars that followed. And you know what they did to Julius Caesar when he came back?
Yeah.
So gold is inflationary. The difference between 2% and 0% is the difference between a half-life of 30 years and a
Of
half-life of a
infinity.
million billion years,
Yeah.
right? And so there you go. Bitcoin is the fix on gold. Gold itself is just a defective treasury asset because it's too slow and it's too inflationary.
Well, I'm glad you mentioned, debt levels and what have you. And again, I am not the student of history that you are. I'm not pretending to be. But what I have read is no developed economy in the history of mankind going back to the Roman Empire has been able to recover from debt to GDP levels of north of 130%. United States, by the way, is right on the precipice of that, number one. And I'm not calling for the fall of capitalism, but what I will tell you is global debt, as reported earlier this week, is now north of $315 trillion, which sits on top of global GDP of approximately $110 trillion. So when somebody like you sees that, and you talk about this all the time, sort of, the fallacy of currency and just the evaporation of wealth right before your eyes, whether people realize it or not. I mean, those types of numbers, I would think, suggest that that's the environment that Bitcoin is going to do extraordinarily well in. So, as central banks continue to run amok, and as basically governments do the same, and I want to talk about Japan in a second, but this is the environment that my sense is this Bitcoin was created for 16 or so years ago. Thoughts?
Um, Back to words. Everybody wants to fight over a word, but let's parse the word money. What is money? A classic economist says money is a medium of exchange, a unit of account, a store of value, and then they stop thinking. Well, okay, so what does that mean? Well, it turns out that in Argentina, the medium exchange is the peso, the unit of account's the dollar, the store of the value is neither. No intelligent person in America thinks that the US dollar is a store of value. If it was, you would find a billionaire that would say that 95% of their assets are in cash accounts in the dollar. And no one is, right? Everybody knows the store of value is something else. Maybe it's the S&P index. Maybe it's a building on Park Avenue. Maybe it's a sports team. So in 1914, we had a war. The war was financed with debt. If you dig a bit, you find out that the Bank of England bought a lot of the war bonds. And you'll find out that the U.S. government bought a lot of the U.S. bonds. So we issued a lot of debt. The governments bought the debt. After the war, they had inflation, right? There's a phrase in New York, right? Pre-war. I think they're referring to World War II, but generally pre-war means before the war, we had good stuff and we built really good, high quality buildings. And then after the war, for whatever reason, we lowered our standards. In Miami Beach, an acre of land before the war was $10,000. Today, it's $10 million. Okay. So will the government collapse? No. Will the currency collapse? Well, it'll just keep sliding.
Right.
So what do you call it if the dollar is worth 0.1% of what it was 100 years ago? It's like, but that's where we are,
Yeah.
right? So the currency will weaken, but intelligent people they will adopt a different asset as a store of value. And the best asset for a store of value in the 20th century, if you were wealthy, was property, like a building or land. And maybe if you were middle class, it was a diversified stock portfolio. Clearly the Vanguard 500 or the S&P 500 became the primary capital asset, and it defined the cost of capital for most corporations and most institutional pursuits. So I think Bitcoin, if you look at it, it's money, but it's the store of value element of money. I think that strong governments will continue to issue currency. They will designate it legal tender. When the country collapses, like El Salvador after the Civil War, or Nigeria, or parts of Africa, when your country or nation state's no longer functional, you won't have a currency. You will adopt somebody else's currency, whether it's the CFA or the euro or the CNY or the USD. But that's okay. And I think that the right way to think about the world going forward is every intelligent person, every reasonable person is going to adopt the local currency as a medium of exchange. They're going to adopt the world reserve currency, as their mid-level, unit of account. That's probably the dollar, unless you're in the Chinese sphere of influence. It might be the CNY. And then they're going to, if they're a conventional investor, a traditional investor, and that's like 99% of the money in the world, they're going to use the S&P index as a store of value, or they're going to have high quality, desirable real estate in the Hamptons or New York or Miami, or they're going to have their home, or they're going to have, probably it's that. Even most wealthy people don't even think bonds are a store of value. They generally think it's, JP Morgan's survey of family offices says 45% of their money's in alternative
Right.
assets.
Which has
Alt
been going
assets.
up every year, I think, pretty consistently over the last decade or so.
Yeah, so traditional investors will use alt assets, equity, or real estate type portfolios, and then occasionally, if they're lucky, they get collectibles, Picassos, or the jets, right? And then the new investors, the 21st century digital investor, will look and they'll add Bitcoin into that mix. And obviously, I happen to believe Bitcoin is by far the best form of property, and it's obviously the best form of digital property. And I happen to believe that the best way to think of it is a capital asset. So I view it as digital capital. It's going to reshape the capital markets. And why is it a little bit better than property? Property evokes $1 billion or $100 million digital warehouse or digital building, but most people don't think that they can decompose and teleport their buildings. But capital, like treasury assets, they need to be liquid. And so if I have $1 billion on my balance sheet and I can liquidate 1% of it a day, and if I can buy 1 million more worth of property or sell 8 million worth of property, as a corporation, I can use Bitcoin as a capital asset. It's very difficult for a corporation to use 4 buildings as a capital asset. I mean, other than, I guess, you would refinance the building, and you would adjust your debt load on the building, and you would be using the dollar, right, as your liquidity there.
Being, again, respectful of language, and I try my best, but there've been currency crises throughout history. I mean, there was a famous one, Bank of England, George Soros. I happen to believe there's one going on right before our very eyes, and it's taking place in Japan. So my question to you is, the Bank of Japan calls up Michael Saylor and says, listen, we need you to come over here and fix our problem. Their problem being their currency is weakening by the day. The other side of their problem is their economy is a bit of a disaster. In their interest rate, I mean, they've had historically low interest rates. They're trying to sort of, I don't even want to use the term normalize rates, but they are caught in in a very difficult situation, sort of that Straits of Messina, where if they go one way, they're screwed, and if they go the other way, they're screwed. How would you try to help them through this process?
Oh, they certainly won't take my advice, but the answer is the first country that can print currency and buy Bitcoin wins.
Well,
Right? That's
theoretically,
the
that's
simple
any
idea
country
is
that
that.
sort of, I mean, there have been smaller countries, obviously, that have gone down the MicroStrategy route, right? And they're at current prices. I mean, it speaks for itself. For example, and I want you to answer the question, but I think MicroStrategy, the stock, since you basically implemented a Bitcoin strategy on August 10th, 2020, at current prices is up over 900%, which is, I think, double the performance of Bitcoin, ironically, and probably 18 times the S&P and maybe 20 times the Nasdaq. So the strategy speaks for itself. Anyway, please continue.
Let's say Japan issues $1 billion of yen, buys $1 billion of Bitcoin. Bitcoin, if they're smart, they would issue $20 billion of yen, buy $20 billion of Bitcoin. When they put out the press release, Bitcoin would triple. They would have $60 billion of treasury assets appreciating at 30% a year. And they would end up with a $20 billion positive balance of payments, right? And it becomes a self-fulfilling prophecy. It's tricky for Japan because they're such a big economy. It would work a lot better for Turkey. Like with Turkey, they need about a $20 billion boost in order to plug their balance of payments. So a mid-sized country could probably do it, but you'd have to be aggressive. If we come back to a company, a company stock is just like a country's currency,
Right.
right? The country can issue currency. By the way, the reason El Salvador isn't quite synonymous is El Salvador doesn't have their own currency. So what I said, the first country to print their own
Fair
currency and
enough.
buy Bitcoin wins. You need to be able to issue $10 billion of your currency, swap it for $10 billion of Bitcoin, grow the Bitcoin 30% a year. And that's the way a treasury reserve asset's supposed to work, right? Because everybody then stampedes into that with you. MicroStrategy had a $600 million enterprise value, and we had 600 million in cash, and we had no growth, and we were dead money, and we were trading $2 million a day in the stock market, guy. That's just like the Russell 2000, or let's say the Russell 1000, the bottom Russell 1000 companies. They're all like that. They're all 500 million to multi-billion dollar companies, 100 million to billion dollar market caps. They all trade 1 million to 20 million a day. They've all got low growth because if you're not Nvidia or Apple or the Magnificent Seven, you just, you can't grow like Microsoft. So we took that Russell 2000 small cap company. We took our cash. We bought some Bitcoin. We bought 250 million of Bitcoin. We put that out on the wire. The shareholder base turned over. We bought another 175 million of Bitcoin. The stock doubled. We all of our employees exercised some stock options. We bought more Bitcoin. Stock increased again. We sold a convertible bond. We bought more Bitcoin. The stock increased again. Bitcoin increased again. You fast forward 44 months, and the stock price 10x'd. The market cap 20x'd, the enterprise value 40x'd. It went from 600 million to mid 25 billion. And so what were we doing? What we were doing is we're issuing our currency, our stock that is, to buy Bitcoin, or we're borrowing against our stock to buy Bitcoin. A nation state could do it too, but we're being far too ambitious to call for the nation state to do it. A much more prosaic, a much more practical next step is, how about for the 1,000 Russell 2000 companies that are all dead money and zombie companies? How about they start doing it? And Japan is saddled with a lot of those zombie companies as well. So the issue really is thousands and thousands of corporations that have dead treasuries because their capital asset on their treasury has a negative real yield. If you hold $1 billion and you put it in T-bills, your after-tax yield's 3%. The cost of capital is 12%. Bitcoin's return has been 40+%. But Bitcoin will almost certainly always outperform the S&P index. So Bitcoin does double the S&P index, and the T-bill does a fourth of the S&P index. The real conundrum here is that the capital asset of the world, of every family, every institution, well, actually every corporation, every government, the capital asset is dilutive and not accretive. A lot of institutional investors and families, they know this instinctively. You'll never find a Wall Street hedge fund master of the universe that brags that his strategy is hold cash and T-bills. Like that's not how they got rich, right? And so normally the perversity is the shareholders are screaming at Apple and Meta, and they're saying, "Hey, you guys need to give us back the capital via buyback because you're going to hold T-bills, and the T-bills are not going to beat the cost of capital." And so we see that with Berkshire Hathaway. They got $190 billion of cash, right? And you see Apple going to do a $100 billion buyback and Meta $50 billion buyback. Well, they're decapitalizing. And what are the people that receive the capital going to do with the capital? Well, they're definitely not investing it in the stuff that those corporations would have invested in. They're going to invest it in at worst, the S&P index, right? That's the default. And if you can't do that, you're destroying capital. So my advice to a sovereign wealth fund is, you basically start to buy Bitcoin as digital capital. My advice to an aggressive small country, if you're small, mid-sized country and you can print your own currency, you either print the currency to buy Bitcoin or you issue sovereign debt and swap it right into Bitcoin immediately, right? You can borrow money cheap and you loan it to Bitcoin at 24% return or better, right? So that's obvious, but I'm not going to hold my breath on countries because it's a very political thing. I think that the people that are the obvious beneficiaries that hopefully are listening to this podcast would be shareholders, officers, and directors of the 10,000 small, mid-sized companies, especially publicly traded companies, which in essence can't outperform the Magnificent Seven. If you don't think you can outperform Google and Meta and Microsoft and Nvidia, and you have some money, you either take the cash and buy Bitcoin, you issue equity and buy Bitcoin, or you issue debt, either senior debt, or even better, you issue convertible debt, convertible to your equity, and you buy Bitcoin, because that allows you to recapitalize with an appreciating asset as opposed to decapitalize and have nothing, or to hold capital in a depreciating asset that is kind of has got a negative real yield and burning shareholder value.
I don't know if you're allowed to answer this question legally, so if you cannot, please don't. But currently, MicroStrategy has 214,400 Bitcoin on the balance sheet. I think the average price is a tad over $35,000 a coin. I think currently you have over 1% of all Bitcoins out there. Where can that go to? I mean, I know you have a vision for this. I mean, where do you see, does that number go from 1% to 10%? Does that number go from, 214,000 Bitcoin to 5 million? Like, how does your mind work? Or is the answer simply, as long as the market allows you to do what you've been doing, you're just going to continue to implement?
We'll keep adding. Right. I mean, we'll keep adding Bitcoin. It's like asking, if you were asking, a real estate developer in the middle of New York City, oh, you own like 8 blocks of New York City.
When do you stop? Right.
When do you stop? The answer, well, we're going to buy the 9th block here when we can put together the financing, and then the 10th. And if you said, well, when are you going to divest from New York City? The answer is, if you talk to New Yorkers, there's nowhere better than New York City. So they're going to keep building. And when they can't build out, they're going to build up, right? And, it's like, well, I wanted to buy another 18 blocks, but I can't. So I rezoned the blocks I own, and I'm going to replace a 20-story building with a 100-story building. And there's Hudson Yards for you, or whatever it might be. MicroStrategy is going to keep developing its Bitcoin position. And it's going to get exponentially harder, right? This last week, you saw You saw Block announce that they're going to
I
start
saw
buying
that.
Bitcoin every month. You've seen a accretion of Bitcoin by a lot of Bitcoin miners. A lot of them are actually not selling as much Bitcoin as they're mining now. I think you're going to see more Bitcoin miners buying more. I think you're going to see more Bitcoin exchanges buying more. I think you see the existing ETFs accumulating, but now we're up to 22 spot ETFs in the world, and they're all in a marketing war with each other. And so they're going to go harder. So I think, and at some point you're going to see other these Russell 1000 companies, right? Which one of them wants to crawl out of their zombie state? It's like you're just waiting for someone to decide they want the money. So I think that when they do that, they drive up the price of Bitcoin, and I have to chase it. My first Bitcoins were below 10,000, and and I'm buying Bitcoin in the 60s now, and that's okay. Um, I don't know where we'll get to. I know we'll get more. We'll accrete from here. We will acquire more Bitcoin than we have right now, and we'll do it via organic cash and via debt, especially convertible debt, and we'll do it via equity, and that'll be a function of capital markets and all sorts of other dynamics. But I think Archimedes said, "You give me a lever long enough and a place to stand, I can move the world." Well, the the place to stand is Bitcoin, right? I mean, it's not a commodity; it's a scarcity. So if it's a scarcity, it's like if I said to you, "There's one city. It's at the trade crossroads of the world. It's the center of the digital economy. One day everybody on the planet's going to be moving their capital through that city, but there's only 276 by 276 by 276 blocks in that city. And by the way, it's like 94% occupied, but you can buy another one of those blocks if you want. Do you want to buy some more? And the answer is yeah, I want to keep buying because just like if I could have bought New York or Manhattan 100 years ago, or 50, or 200, or 30, or 300, tell me, at what year, how many years ago was it a bad idea, right? I think it's always been a good idea if you can hold, right? As long as you can hold the property. And why is Manhattan a good idea? Because it's a granite island at the middle of Long Island Sound and the Hudson, and it's got great natural harbors. It's the gateway to North America. It was always the best place to put a port, right? And if you look at it and you cruise around it and you stare at it and you look at the fact you can build that on top of that schist, it's obvious people are going to want to live in and do business in that city for hundreds of years.
I think the term defenestration came in the early 1400s in Prague when I think 7 town officials were thrown out of a building because, they probably trying to upend the status quo. It happened again, I think, in the 1600s. Similar thing happened in Prague as well. I mention that because my instincts suggest you need a culture, a group of people that understand sort of basically upturning the apple cart to understand what you're trying to do. And you're speaking, I think, as I said earlier, on June 14th in Prague to discuss Bitcoin at a place that probably, in the world is one of the most equipped cities to sort of, I don't know, understand and embrace what you're talking about. Speak about that real quick.
There's $900 trillion of capital or wealth in the world, and I think there's 1 trillion in the Bitcoin network. So 0.1% of the economic wealth in the world has found its way into digital property. Most of the people don't have an hour to talk. Like most of the world, I'm sure Charlie Munger never listened to a 2-hour podcast on Bitcoin. So most of the wealth in the world is in the hands of people that don't really understand what Bitcoin is. And a lot of the advocates of Bitcoin, they have been intentionally confrontational or inflammatory, and they've gotten into a bunch of other debates. Like, does Bitcoin stand for replacing banks or replacing currency or replacing government or replacing whatever? No. What is Bitcoin? It's digital capital. What's the addressable market of digital capital? Somewhere between 100 and 400 trillion dollars. So what is Bitcoin? It's 100 to 400x from here once you understand what it is. So what's the impediment? Well, I mean, the impediment is just education. And so what are we doing? We're educating, like I go and I give a speech in Vegas, and there could be a few hundred or a few thousand people in the room, but then a million people will watch the speech online. I sat with Lex Friedman and I talk about Bitcoin and
For over
economics, and
3
there's
hours. I watched it.
okay, 9.1 million other people have watched it. But, every day, Guy, another 10 or 20,000 people watch it. It's a residual. Now imagine I retired and went off to be a college professor to teach students 1,000 a year. It's like your entire career, you don't get to 20,000 people. So Bitcoin's an idea whose time has come. And if you interpret it as digital currency, you get anxiety and you get inflamed and it's hard to make progress. But if you interpret it as digital capital, you think, wow, this is good for every country, every bank, every company, every person, everybody I ever met. It's just a universal good thing. It's about as good as digital information or digital communication. You don't find anybody that doesn't like technology. You know what? Why am I going to Prague? I'm going to Prague just to explain why this is a good thing, and yet a different way. It'll be recorded. There'll be 2,000 people that'll be in Prague, and they'll be Bitcoin maximalists, and they'll be ideologically passionate individuals. But the hope always is to explain to everybody in Europe or everybody in the rest of the world why it's in their best interest to embrace a new technology. When you just think of it as technology, electricity, steel, there's no ideology associated with it. It's not going to solve all the other problems in the world. Like, we're not going to solve the problem of wealth inequality, or censorship, or lack of freedom, or the fact that you disagree on this fiscal policy or that foreign policy. And those are all just very admirable things to work on. It's just not what I do. I believe you have to have laser like focus on doing one thing. And if you laser like focus in on one thing, maybe you'll be able to make a contribution, and you ought to be grateful for the opportunity to make a single contribution. So my contribution right now, is to advocate for Bitcoin as digital property, digital capital, digital technology to make everybody's life better. I'll be doing that in the most cheerful, constructive way I can in Prague.
Michael, I'm honored to know you. I call you a friend, and I don't use that term lightly. And I thank you for your time. It's generous. There's a saying in history that's been bastardized by movies and different things, but we mock what we don't understand because we fear what we do not know. And I think to a large extent, that's what's happened in your universe and you specifically. But you know what? You're out there advocating, you're out there preaching, and quite frankly, you're one of the most brilliant minds that I've met, and I admire you a great deal. So thank you for spending some time, Michael Saylor.
Well, thank you for the opportunity. I always appreciate our conversations.